Hey guys, it's Nick with Fitness Alongside Finance, giving you guys another weekly episode. This week we're talking about different types of investment options, but this time in detail. We're talking about stocks, bonds, mutual funds, etc. Investment options are broadly categorized into two types. They're traditional and alternative investments. Traditional investments, we first start with stocks. They're also known as equities. They represent ownership in a company, and when you buy a stock, you own a small piece of that company and can benefit from its growth and profits. Stocks are considered a high-risk, high-return investment, but something to keep in mind is that not all, companies are a great place to invest in. It really just depends. If you, had future knowledge and you took a time machine and pulled Back to the Future and took that DeLorean time machine and just happened to see yourself and give them a few, insider tricks and tips from our channel, you'd probably be a gajillionaire. You'd probably have some funds in Apple or Google. And, well, let's just say if somebody's got a time machine, they should really help a boy out. But the second type of investment for traditional is bonds. They're a type of debt security. When you buy a bond, you're lending money to a company or government. In return, the issue of the bond promises to pay you back the principal plus interest, so you get what you pay and then some. Bonds are considered a lower risk, lower return investment compared to stocks, but it's something that you guys can give to your, little kid or just to someone that doesn't have a lot of money, and later in life they go and they trade it in and now they've got an additional $500. Always a good Christmas present or always a good birthday present. Just something to think about in the future. The third type of traditional investment are mutual funds. Mutual funds is a type of investment vehicle that pulls money from multiple investors and uses it to buy a diversified portfolio of stocks, bonds, or other securities. So it's just more of a collection of the first two traditional investments. A mutual fund is usually managed by a professional fund manager who makes investment decisions on behalf of the fund's investors. Mutual funds offer diversification, but they come with some management fees. So when it comes to that diversification, it's a good thing to have. The fourth type of traditional investment is the exchange traded funds, an ETF. Exchange-traded funds are similar to mutual funds in that they provide diversification, are managed by professionals. However, an ETF or an exchange-traded fund trade like a stock on an exchange, and their price fluctuates throughout the day based on supply and demand. An ETF has generally lower management fees than a mutual fund. Now, moving on to the second type of investment options is the alternative investment. Those are things like real estate. When it comes to that, real estate investing usually involves buying, owning, managing, and renting out properties. It can generate income through rent and can also appreciate in value. So your home is usually worth more by the time you're done with it, or whenever you're done flipping it, or whenever you're done, renting it out to other people. It can also be relatively illiquid in its investment, meaning that it can be hard to sell quickly. So you got to consider, just can I buy this property and can I flip it fast? So the second type of alternative investment is private equity. Private equity involves investing in a private company that's not publicly traded on stock exchanges. It can be a high risk, high return investment, usually requires a large amount of capital. The third type of alternative investment is a hedge fund. Hedge funds are an alternative investment that use a variety of strategies to generate returns. They're typically only open to an accredited investor and come with high fees and minimum investment requirements. So you're talking about, you got a lot of money, it's probably the way to go. And it's not really the average day Joe's, option when it comes to investing or trying to get into the game of investing. The fourth way is commodities. Commodities are physical goods such as gold, oil, or just general products. Investing in these products can provide, a way to get ahead and So you're looking at selling on Amazon, or, like I said earlier, gold. If you can get a lot of gold, you can get a lot of, money real fast. But investing in commodities can provide a hedge against inflation and offer diversification benefits. So again, it really just kind of depends on what you end up putting your money into, and it all depends on the commodity. The other thing we need to make sure is when you're choosing any of these investment options, you got to consider your risk tolerance and investment goals. You just got to make sure that it's for you guys, because if you end up putting all your eggs in one basket, like I said earlier, you are pretty much, it's do or die. So I would highly suggest diversification. It's important to make sure that you guys consult with your financial advisor or professional. Again, like I've said on a couple other episodes, we here at this channel, we try and give you a foundation. We try and give you guys knowledge that's not readily available. Or it is, and you just want it in a video format. But make sure you guys do your research and don't take our word for it. Just make sure that y'all just put in that time and you guys can go places. And that's all I got for this week. Y'all have a good one.